students to the massive open online course in money and financial markets. In our last module, we dealt with several regulatory institutions in India. In today's module, we are going to deal with the second part of this, that is regulatory institutions in India, part 2. In this module, we will try to understand the functioning and initiatives of two very important bodies in the Indian economy. One is the Insurance Regulatory and Development Authority of India, that is IRDAI, and the Pension Fund and Regulatory Development Authority, which is otherwise known as PFRDA. Let us first start with the IRDAI. The Insurance Regulatory and Development Authority of India is a statutory body which has been formed under an Act of Parliament, that is the Insurance Regulatory and Development Authority Act 1999, for overall supervision and development of the insurance sector in India. The powers and functions of the authority are laid down in the IRDAI Act 1999 and the Insurance Act 1938. The key objectives of IRDAI include promotion of completion so as to enhance customer satisfaction through increased consumer choice and fair premiums while ensuring the financial security in the insurance market. The Insurance Act 1938 is the principal act which is governing the insurance sector in India. So it dates back even before independence, that is in 1938. It provides the powers to IRDAI to frame regulations which lay down the regulatory framework for supervision of the entities operating in the sector. Further, there are certain other acts which govern specific lines of insurance business and functions, such as the Marine Insurance Act of 1963, the Public Liability Insurance Act of 1991. So overall, the Insurance Regulatory and Development Authority of India, the IRDAI, this basically tries to promote competition as well as customer satisfaction in the insurance sector in the Indian economy. Now, IRDAI has a mission for itself. It adopted a mission which can be described as follows. Number one, it wants to protect the interest and also secure fair treatment to all the policyholders. It wants to bring about a speedy and orderly growth of the insurance industry, including all sorts of annuity and superannuation payments for the benefit of the common man or the common citizen of the country, and also to provide long-term funds for accelerating the growth of the economy. It would help to set, promote, monitor, and enforce high standards of integrity, financial soundness, fair dealings, and competence of those it regulates. It would ensure speedy regulations or speedy settlements of genuine claims to prevent insurance frauds and other malpractices and put in place any sort of effective grievance redressal mechanism. To promote fairness, transparency, and orderly conduct in financial markets dealing with insurance, and build a reliable management information system to enforce high standards of financial soundness amongst the market players. It also would want to take actions where such standards are inadequate or ineffectively enforced. And IRDAI also seeks to bring about optimum degree of self-regulation in the day-to-day working of the industry, consistent with the requirements of prudential regulation. Now, coming to this question of what would be the structure of IRDAI, IRDAI is generally a 10-member body which consists of, number one, a chairman, and the tenure of the chairman would be for 5 years, and the maximum age of the chairman can be that of 60 years. Next, there are around 5 whole-time members. Now these 5 whole-time members, their tenure is also for 5 years and their maximum age can be that of 62 years. And then they have 4 part-time members. And the tenure of these 4 part-time members can never be more than 5 years. And the chairman and the member of the IRDA are all appointed by the government of India. Now coming to what are the duties and powers of IRDAI. Now section 14 of the IRDAI Act 1999 lays down the duties, powers and function of IRDAI. Subject to the provision of this Act and any other law from time being which has been in force, the authority shall have the duty to regulate, promote and ensure the orderly growth of the insurance business and also that of the reinsurance business. Without prejudice to the generality of the provisions contained in subsection 1, the power and functions of the authority should include certification of insurance companies, protection of the interest of the policyholders, and thirdly, adjudication in case of any sort of disputes. The IRDAI is also about to issue to the applicant a certificate of registration, renew, modify, withdraw, suspend or cancel any sort of registration that it has done, protecting the interest of the policyholders in matters concerning assignment of policy, nomination by the policyholders, insurable interest, settlement of insurance claim, surrender value of policy and other terms and conditions of the contracts of insurance, specifying requisite qualifications, code of conduct and practical training for intermediary or insurance intermediary and agents, and specifying the code of conduct for surveyors and loss assessors. IRDA has several promotion and regulatory functions. What are they? First and foremost, it promotes efficiency in the conduct of the insurance business. It also promotes and regulates professional organizations which are connected with insurance and the reinsurance business. It levies fees and other charges for carrying out the purposes of this Act. It calls for information from undertaking inspection of, conducting inquiries and investigations, including the audit of the insurers, intermediary, insurance intermediaries, and other organizations that are connected with the insurance business. It should control and regulate the rates, advantages, terms and conditions that may be offered by the insurers in respect of general insurance business not so controlled and regulated by the Tariff Advisory Committee under Section 64U of the Insurance Act of 1938. They should specify the form and manner in which the books of accounts shall be maintained and the statement of accounts shall be rendered by the insurers and other insurance intermediaries. It also looks into the regulation of investment of funds by the insurance companies as also regulating the maintenance of margin of solvency. IRDAI has also some other specific duties like adjudication of disputes between insurers and intermediaries or insurance intermediaries. Also, supervising the functioning of the Tariff Advisory Committee. Specifying the percentage of premium income of the insurer to finance schemes for promoting and regulating professional organizations referred to in clause F. Specifying the percentage of life insurance business and general insurance business to be undertaken by the insurer in the rural or the social sector. And lastly, exercising such other powers as may be prescribed. The IRDAI has also been very much famously known for certain major initiatives that it takes. The first one deals with the Insurance Laws Amendment Bill of 2015, which was passed by the Lok Sabha on the 4th of March 2015 and by the Rajya Sabha in the same year itself, thus paving the way for major reform-related amendments in the Insurance Act of 1938, the General Insurance Business Nationalization Act of 1972, and the Insurance Regulatory and Development Authority Act of 1999. The Insurance Laws Amendment Act 2015, that was enacted in 23rd March 2015, has seamlessly replaced the Insurance Laws Amendment Ordinance of 2014, which came into force in 26 December 2014. The Amendment Act removed archaic and redundant provisions in the legislations and incorporated certain provisions to provide Insurance Regulatory and Development Authority of India with the flexibility to discharge its functions more effectively and efficiently. And the most important part here is that it provided the enhancement of foreign investments, a cap in all sorts of the Indian insurance company from 26% to an explicitly composite limit of around 49% with the safeguard of Indian ownership and control. Now, the most important part of the insurance companies has been in relation to foreign investments. So these regulations in terms of the insurance companies has been extremely important. So the government made the Indian insurance companies foreign investment rules 2015 regarding manner of holding of equity by equity shares by the foreign investors. The Indian Insurance Company Foreign Investment Rule 2015 were amended again, while the Indian Insurance Companies Foreign Investment Amendment Rule 2016, which was notified in the month of March 2016, and here it enabled the foreign investment up to 49% in the insurance sector through automatic route, instead of going through the government route for foreign investment beyond 26% and up to 49%. So previously, beyond 26% up to 49%, they had to take the government route. But now, after this Amendment Act of 2016, they can straight away, till 49%, go on the direct route and need not take the government route. So, another very important point in relation to the insurance is the reinsurance. So the reinsurance business in India has to be promoted. So the Insurance Laws Amendment Act of 2015 enabled foreign reinsurers to set up their branches in India, and also enabled Lloyd's, companies like Lloyd's and its members, to operate in India through setting up of branches for the purpose of reinsurance business or as investors in the various Indian insurance company within the foreign investment cap that I have mentioned, that is within that 49% cap. Now, since, as I said, that IRDAI's main role is also to look into the redressal of any sort of grievances that policyholders might have. So we need to speak on this issue also when we talk about IRDAI. That is a redressal of public grievances, the notification of the Insurance Ombudsman Rule that was set up in 2017. Now, the central government has notified that the Insurance Ombudsman Rule of 2017 in the month of April in 2017. The object of these rules is to resolve all complaints of all personal lines of insurance, group insurance policies, policies issued to sole proprietorship and micro enterprises on the part of the insurance companies and their agents and intermediaries in a very cost-effective and extremely impartial manner. Now, next, I talk about the convergence of life and accident insurance schemes to PMJJBY and PMSBY. Now, in view of all the decisions that were taken in the meeting of the committees of secretaries on convergence of the insurance schemes in 2017, all ministries or department except Ministry of Labor and Employment for Aam Aadmi Bima Yojana, the AABY, they have converged their life and accident insurance schemes to PMJJBY and PMSBY in the year 2017. Next, we come to the listing of public sector general insurance companies. So, to promote the objective of achieving higher levels of transparency and accountability, the Cabinet Committee on Economic Affairs, which was chaired by Prime Minister Shri Narendra Modi in the month of January 2017, a very in principle some sort of approval for listing 5 government-owned general insurance companies, namely General Insurance Corporation of India, the New India Assurance Company Limited, United India Insurance Company Limited, Oriental Insurance Company Limited, and NIC, that is a National Insurance Company Limited, in the stock exchanges. The shareholding of these public sector general insurance companies will be divested from 100% to 75% in more than in one or more tranches over a period of time. During the process of disinvestment, existing rules and regulations of SEBI and the IRDAI has to be followed. And then we have the anti-money laundering, that is the AML, or combating the financing of terrorism, that is whether terrorism or terrorist activities are financed by using this sort of money, CFT. We need to look into this. So the anti-money laundering, that is AML, and combating the financing of terrorism, that is CFT, guidelines for the insurance sector. These guidelines were issued in the month of March 2006. The sector entered into the effective AML CFT regime, and the IRDAI works closely with various departments of the ministries or agencies in the implementation of these guidelines. They have initiated various measures towards accomplishment of the AML or the CFT guidelines in the insurance sector. So basically the insurance sector takes these activities very, very carefully and looks into the fact that they effectively accomplish all such activities. These were previously all the major initiatives that were taken by RDI. Now let us look at certain recent initiatives that IRDI has taken. The first one relates to insurance marketing firms. Now, IRDI had brought the new concept of intermediaries in the insurance distribution, and these intermediaries are known as insurance marketing firm or IMF. These regulations to this came into effect in the year 2015, which cover insurance soliciting and servicing activities of the insurance market firms and its functions. Including the person involved, that is the ISP, the insurance salesperson. It is expected that standalone marketing firms will be established with the objective of distributing the insurance products, which will pave the way for penetration of insurance. So, in order to encourage more firms to pioneer as insurance marketing firms, they are also permitted to simultaneously market other financial products such as the mutual funds of mutual fund companies, pension funds of PFRDA, and also other financial products which are marketed by the investment advisors of SEBI. The insurance marketing firms are expected to increase insurance penetration in the Indian economy. Next, another major initiative, a recent initiative that has been taken by IRDI is common service centers. Now, the authority permitted the use of the common service centers as a distribution channel for selling and servicing the insurance products. So, guidelines are issued to permit both life and general insurers in India to market certain category of retail insurance policies and services through Messrs. CSC. What is CSC? Common Service Center, E-Governance Services India Limited, and its Common Service Centers network. The authority approved products which are suitable for sale in rural areas through this channel, which would help in rural penetration of insurance in a big way. And thirdly, we have the concept of the web aggregators. Now, what are these web aggregators? They are basically, they maintain or they might own a website, and they provide information pertaining to insurance products and comparisons of prices of different insurers and other leads to insurers. So the authority has issued regulations also for the web aggregators in 2013, again in the month of March. Fourthly, we have this concept of insurance repositories. Now, they are insurance repositories are the IRs. They provide and empower the policyholder with a facility to keep insurance policies in electronic form at one place and to undertake changes, modifications and revisions in the insurance policy with the speed and accuracy in order to bring about efficiency, transparency and cost reduction in the issuance and maintenance of insurance policies. So based on the above, the authority issued licenses initially to 5 IRs. Now, out of that, numerous accounts has been opened, and many policies have also been converted into the electronic form. Fifthly, we talk about the issuance of electronic insurance policy. Now, consequent upon the promulgation of Insurance Laws Amendment Act of 2015, IRDAI has come out with the IRDAI Issuance of E-Insurance Policies Regulations 2016 in respect of issuance of electronic policy and the submission of electronic proposal form of insurance policies. The most important initiative that has been taken by RDI is recognizing health insurance as a separate class of business. The Insurance Laws Amendment Act of 2015 recognized health insurance as a separate class of business. Section 2(6)(c) of the Act defined health insurance business as health insurance business, meaning the effecting of contracts which provide for sickness benefits or medical, surgical or hospital expense benefits, whether inpatient or outpatient travel cover and personal accident cover. So it is one of the most important milestones of the Indian insurance business. Recognition of medical health insurance as a standalone class of business is expected to usher in an era of improving the access to health services to all segments of the population, thereby reducing the share of out-of-pocket expenditure in the overall medical expenses. Now, recognizing health expenses as a class also encourages new players to enter the field not as insurers alone, but as stand-alone health insurers in the Indian economy. Next, as I said, that I will also touch upon PFRDA, that is a Pension Fund and Regulatory Development Authority. Now, based on the report of OASIS, what is OASIS? Old Age Social and Income Security. This was a national project that the government of India had initiated to examine the policies related to old age income security in India, and the government decided that it needs to replace the then defined pension system to defend contribution pension system, the CPF, with respect to all new joinees of the central or the state government except armed forces. Now, accordingly, IPRDA, that is an Interim Pension Fund Regulatory and Development Authority Bill, was passed by Union Parliament in February 2003, which established IPRDA to promote, develop and regulate pension system in India. IPRDA was passed in order to have a system in place till the final and a foolproof system is prepared, reapproved and implemented with the acceptance of all political parties in the economy, including opposition party. Now what happened? The final system, that is a PFRDA, Pension Fund Regulatory Development Authority, was established with President's assent on 19th September 2013 and was made a permanent act. Now, I would go more and say that for all the citizens of this country, this type of social security in terms of pension and pension fund was the most important milestone that was reached by the Indian economy, and for the welfare of these old age people and those people who does not have any sort of productive years left in their lives, this would surely go a long way in doing welfare to the huge old age population that our country has. Now, an act to provide for the establishment of an authority to promote old age income security by establishing, developing and regulating pension funds to protect the interest of subscribers to scheme of pension funds and for matters connecting thereto or incidental thereto. Now, what is the significance? The PFRDA Act is the linchpin of India's pension regulatory framework. This act is supplemented by regulations which are issued by PFRDA. They regulate the functioning of the key intermediaries under the National Pension Scheme, the NPS framework. These include the NPS Trust and also the POPS, that is a pension funds and points of presence. Now, what is the structure of this PFRDA? It consists of a chairman and not more than 6 members, of whom at least 3 shall be whole-time members who are to be appointed by the central government. Now, functions of PFRDA. Very quickly, if we just go through the functions of the PFRDA, they regulate the NPS and other pension schemes to which the PFRDA Act applies. It establishes, develops and regulates the pension funds. It protects the interest of pension fund subscribers. It registers and regulates the intermediaries and lays down the norms for management of corpus of pension funds, establishes grievance redressal mechanism for the subscribers, settles disputes amongst the intermediaries, train intermediaries and educate the subscribers, calls for information, conduct inquiries, investigates and audit of intermediaries and other entities who are connected with the pension fund. And lastly, I will just touch upon the most important scheme in this respect, which is the NPS, the National Pension Scheme, which is a defined contributory pension system introduced by the PFRDA, whereby subscribers' contributions are collected and accumulated in an individual pension account using various intermediaries. So under the NPS, individual contributions are pulled together into a pension fund and is invested as per investment guidelines. So funds basically are generally invested in diversified portfolios consisting of government bonds, bills, corporate debentures, shares, and this is totally based on the subscriber's choice. Subscriber also has an option to exit, okay, at the time of exit, and he can also purchase at the time of exit a life annuity by using the accumulated pension fund. And as I have said before, NPS is also governed by the PFRDA. So I come to the end of this module, and as I have said here that the two very important regulatory bodies in India, that is one that regulates all the insurance, both the life and the non-life insurance, that is the Insurance Regulatory Development Authority, and the second one, which is very, very important to maintain our social security, that is the Pension Fund Regulatory Development Authority. These two regulatory institutions have been discussed in detail in this module. Thank you.